Alright, switching our attention now to gold spot. Again, this market has been consolidated all week too. Really nothing to see here. Even though we did, as far as price action, on Thursday we closed up $9.72, up to 0.82% with strong bids into the close. We still have nothing really to deal with here. Bottom line is, currently the trend is neutral within the bullish Kumo consolidation cloud, meaning we have a possible trend reversal with downside bearish breakout risk. On Friday, what we're looking for is a close above $1,220.01 an ounce to reestablish an upward trend, or a close below $1,179.01 an ounce to establish a new downward trend. So we need to see something. It's possible that this market can continue to consolidate within those two price ranges. So we'll see. As far as trendline retracements, we're still currently above the long-term trendline retracement of $1,095.20. The first problem gold is going to have is if we're going to reestablish an upward bias, we're going to need to get past two resistance zones, okay, before we get to the 1220. We're going to have a problem with the short-term trendline retracement of $1,196.95. We got to close above that. Then if we can do that, the next problem we're going to see is some strong selling when we get to $1,203.05. So we can close if we can close above those two price levels, then we can probably make a run for the 1220 mark and reestablish an upward trend. If not, it could break down. Now, our 12 to 18 month outlook price target, if we reestablish a bull market trend here, is to top out around $1,604.65 an ounce. So that's what we have. No buy or sell signals for Friday. One final note though, on the volatility side, we closed above the lower band by 32.5%, and this combined with the steep downward pressure suggests that the downward trend in prices has a good chance of continuing. However, a short-term pullback inside the bands is likely. So in other words, all that means is that we're going to probably consolidate a little bit more, maybe another week or so. We'll have to wait and see. All right, switching our focus and attention to silver spot. On Thursday, the market closed up 44 cents, up 2.50%, with strong bids into the close. The difference here is that we have a negative reading on the pulse scan, and we also have a downward trend channel, and we're 3 days into it. So silver has a little bit more resistance in it. As far as the trend here is also neutral. Trend strength is also neutral. We're not trending at this time. The close though is currently above the long-term trendline retracement of $16.48. This market has two resistance zones that it is fighting against. The first one is the short-term trendline retracement of $17.92. Need to close above that. Second resistance will be at $18.13. And if we can clear those two hurdles, then silver could put itself in a position to rally. Our 12 to 18 month price target on silver is $26.44 an ounce. As for volatility, we closed above the lower band by 48.9%. This combined with the steep downward pressure suggests that the downward trend in prices has a good chance of continuing. However, we expect a short-term pullback inside the bands. As for this being in play for Friday, we do actually have a system-generated short entry, and that's a possible third pulse wave developing. So that would be a sell short at $17.40 a share, with a profit target initially of $6.52 a share, and a stop loss is actually a stop and reverse at $18.20. And I keep saying share because it's a silver spot, not the SLV ETF. So that's a correction. $17.40 an ounce is the entry point to sell short. Initial target is $6.52 with a stop and reverse at $18.20. So if you're filled today, You're going to want to let that $18.20 stop and reverse ride. Make sure you put that order in correctly so that if you get stopped out, you take a long position at $18.20. And that's all we have on gold and silver spot.